If you had to keep yourself at a strict R to R in these market conditions, like, would there be a certain amount of like ticks, points?
Um, I don't really have a I don't have a faith in that because I'm a little bit more of a universal trader. I can go in and just
Right.
I can carve out whatever I want with the one to one. My strike rate's a little bit higher than the average bear, so I can thrive in one to one. But if your experience level is not so up to par with someone that's doing it, more consistently, more profitable for a longer period of time, aim for 3 to 1, and I think that'll serve you well. 5 to 1 is like that's the upper echelon, the top tier of modeling, and it would really filter out a lot of the bad trades for you in this environment. But are you equipped to say, I only had 2 trades this week because this is what my R multiple is? Most people aren't. They feel like they got to be in there trading every single day, and this environment is not conducive for that. For new traders, their experience level is too small, and that's not a knock against them. It's just the reality. Listen, you can get to a point where you can buy and sell all day long in the same instrument, and not have a real technical model. Just trade liquidity and inefficiencies. Just volatility trading. That's it. Ping pong, up and down. That's it. But when you first start, you don't know what that. You can't do that. Okay, you can't do it. And people that try to do it, they hurt themselves. And I got copious emails all around the world from different people all the time saying that they've tried this and they can't do it. Can you please help me? I was like, well, you got to start in the beginning. This is the way you do it. And by tape reading, you'll find what what you're supposed to be being consistently with. So, what is it your model that's going to capitalize on? What is it you're trying to capitalize as a run in price? Are you looking for liquidity? Are you trading to inefficiencies? Are you trying to do expansions outside of that first 30-minute range for the daily range? And I'll say this: I saw a comment. This is why I posted what I said on Twitter this morning. Kyle, you know him as JCap. He posted a video yesterday that I did not know about until some of the students mentioned him as a response to something I said. And I didn't see his video, but I watched about a half of it this morning, and I see what he said, and I didn't complete it, so I'm going to be very careful about what I say because I didn't completely watch it yet because of the live stream I was doing this morning. I intend after this to grab something to eat and listen to the remaining portion of it. But he titled his video saying that you've been lied to about lower time frames. Now I get it, the gotcha clickbait type titles and all that stuff. That's the thing you get people to watch it. And I listened to the first portion of it, and what I heard, it took me back to me trying to trade like Larry Williams. See, Larry Williams said, try to hold for the close. The biggest trades, the biggest wins you're going to have is if you get in around the open somewhere. Okay, and on bullish days, he was buying bullish breakouts to the upside. That's what he was doing. He was chasing buy breakouts. Is what he was doing. That's what his models were doing. He would buy a break above 20% of the previous day's range. What is that? That's breakout. There's nothing technical about that. It's just he knows it's likely going to be a big range day. He's not going to be an overthinker. He even admits it many times. He's not very smart or technical when it comes to trading. He just puts heavy-handed bets on and holds for the close. So what did young ICT think? Well, I better hold for the whole day. But my ability to get in at the opportune time wasn't up to snuff yet. So I would be in capturing the intraday high of the first hour's range. I'm buying that, and then I'm getting raked across the coals the other direction. Why? Because I'm holding to a mentor's perspective. I have a great deal of respect, even still today. I don't trade what he does, but this information that he put out, I had faith in. I put all of my investment funds in this idea of every trade I enter, I've got to hold on to the close. Now I'm driving around Baltimore, vicinity, filling candy machines and such, while I'm stressing, making and losing money, watching this little transistor radio size thing tell me what the price of all these markets are doing, and I'm losing my mind about it. Holding on, I got to hold to the close. I can hear him in my head. Traders that make the most money are holding to the close. That's where you want to make the big money. It's not the getting in and getting out day trading. Well, I have found, and this is kind of like a response to JCap, he said that he lost a lot of money and hurt himself by doing a lot of lower time frame trades. And I guess one would do that if you're just trying to chase every little thing. And everybody does this. Everybody does it. When I transitioned from higher time frame charts down to lower time frame charts, I got slapped around a lot because I was trading without a model, without context. I had no idea what I was doing. But I think I'm illustrating to you all now in no uncertain terms that I know what I'm doing. I know what I'm looking for. I know how to anticipate certain things. That doesn't make me the better trader than Larry Williams. It doesn't make my methodology employing teaching the way I'm doing right now better or less than what Jade Cap does with his trading. I took away from his video that this is what he found works for him. There's too many decision prompts with lower time frame charts. So to avoid that for himself, he focuses on a higher time frame chart. But when I tried to apply that when I was coming up, that actually hurt me. So I went in, I turned everything upside down without saying to Larry Williams, I'm turning everything upside down that you taught me. I'm going to go into lower time frames. And you said it's just noise, that's not the right way to do it. You want to make a lot of money. And now I can go into an individual day and I can parlay up whatever that hold to the close type thing would do. I can parlay that up in every 15-minute interval. So it doesn't hold true to me, but in the beginning it did. So having this expectation of being consistent, what you're looking for, what your model, what you're comfortable with in your own hands. I have a lot of things that anyone can come in here and say, this is what I'm going to do. The problem is, as a teacher, this is what I struggle with as a teacher. I can't take anybody that comes to me and says, this is what I'm trying to do. This is what I want to trade. This is the market I like. And this is the time I have available to trade. Build me a model. Okay, I can suggest to you certain things and certain time frames to work within for charting, but then the model itself has to come by your own personality, what you agree with. Many of you are not going to be contrarian. You want to be following the herd, whatever it's been doing. Well, that's a silver bullet. That's easy. But what happens if you're a contrarian and you don't like what's going on in the marketplace? Then you're a turtle soup. You're a false breakout type trader. Rarely are there going to be a trader that can do well in the beginning both ways because it's a divided mindset. So that divided mindset is going to be a barrier to entry for you finding your unique model. So we can say these terms like, we're aiming for consistency and do the tape reading and follow the plan I'm laying down here today, but there's still a great deal of emphasis and responsibility on your part as the student to determine where you're being drawn to. Because there's a lot of PD arrays that I have, you won't ever touch them. You won't even use them. It will never be a factor in your trading. And you can make lots and lots of money without ever doing them things. But the problem is you're going to wrestle with which one you're going to side with in the beginning. Just pick one. It may not be the one you stay with, but because you're following one, the exposure of reading the tape live, or at least recording it, don't do it through market replay. You have to see every individual candlestick from the beginning to its close. Because if you do anything other than that, you're not getting a true depiction of what it feels like watching that form. Your subconscious will retain that. And then what you think is your model or what you're aiming for your model, you'll start seeing other things that jump off the chart to you. And you'll say, I noticed this more. That's what you're aiming for. But if you don't give yourself enough time doing it, 2 months, you won't know what your model should be pursued. You won't know what that is. So by doing these types of things, I'm not trying to make it harder for you or prolong your destination to success. I'm equipping you the best way that I could have corrected myself a whole lot sooner had I known this way of doing it. I was in a hurry to make the money. I needed to make a lot of money. I needed to try to win back an ex-wife. I needed to prove to my friends, I was something I wasn't. Bottom line is, you have to have a process. You have to have something you're going to submit to that doesn't immediately yield to you profit or clout online. You need to keep it private. Don't tell everybody what you're doing because everybody's going to give you advice why that doesn't work. And they're probably going to work today. So the bottom line is simply slow down. Slow is fast and fast is smooth. And you want the learning curve to be just like that.
Thank you, Michael. I appreciate it.